Turning to business now with Giles Beckford. And Giles, I gather the warehouse has had a bit of a shocker today.
Indeed. Good evening to you, Rowan. Yes, it was their annual result, and to be fair, it was a plunge, a slump. That's not too harsh to say that. The 12-month profit was down by nearly 3/4 to just over $20 million. In fairness, we did know something like this was coming. They had to give warning to the market some weeks ago, and they'd given quite clear indication that they'd been hit by a slow start to winter, that they were feeling the effects of strong competition from the likes of Kmart and Farmers and all the online retailers such as Amazon as well. And in particular, they had done a lot of dough on their consumer finance business. And this is in fact where they lost a lot of money. They had to write down quite a lot of value there, their investment. They've just actually scrapped it. So the upshot of that was that they've written off $40 million worth of restructuring costs and the losses on that finance business, hence the sharp fall in the profit. They're having to take some remedial action on this one, as you would imagine. They've restructured, they've lost around 150 jobs. They're looking at slimming down their product range. You can see there's vast numbers of different types of commodities and products in their shops. So they're looking to try and get some rationality about that. They're also looking at the prospect of putting their blue shed stationery shops inside the big red sheds. So you have a shop within a shop, and that'll be something new for them. And they're also going to try and beef up their online shopping offering to consumers. So that will undoubtedly cost them money in the future, and they say that there will be costs associated with that, but in the long run they think this is their way of becoming more profitable. The best showing in the group, the Noel Leeming electronics appliance shops, they had strong earnings growth. The one that's struggling a wee bit, the red sheds, just feeling the pressure there of the competition, and they're giving no forecast yet on their earnings. We'll get that as they get a better indication going into the summer Christmas period.
And Giles, a big day tomorrow. How are the markets faring ahead of the election?
Yeah, it would be fair to say that they're treading water, but we've seen some skittishness in the markets. It's been going backwards and forwards depending on the poll results. The wisdom that gets put around is that the markets are apolitical, but I think that's really a wee bit of a fiction. The reality is that they lean towards centre-right governments, towards a national style of government, because they regard them as business friendly. They regard them as governments that will deliver less regulation. There will be fewer rules and restrictions on doing business, on moving money around the country and around the world, that they'll keep taxes down. So that's why they tend to favour centre-right governments. In this case, the polls which showed National opening up a reasonable lead on Labour saw the currency rise about 0.5% earlier this week. It's eased back a wee bit, but going into Monday, if there's no clear result from the election, there may be a little bit of uncertainty, a little bit of skittishness. We may see the currency just bouncing around a little bit. If there's an indication that Labour, in fact, is in the driving seat to form the next government, then I wouldn't be surprised to see a little bit of a sell-off in the New Zealand dollar and possibly see the share market dip back a little bit as well. But just going into that vote, the New Zealand dollar, 72.8 US cents and 91.8 Australian, and our top 50 indexes close the week 19 points higher, 7815.
Thanks very much for that, Giles.